Hi guys, I recently posted a video on Chocolate Finance where they are giving a promotional 1% boost on newly added monies as part of SG61's birthday. So today I'm just gonna open the hood on Chocolate Finance. Let's find out because some of you actually asked me on the site, if I put my monies in or what is the risk? What am I investing in? I don't really understand how are the returns generated. So let's take a look on all these factors. But as always, this is not financial advice. These are my own opinions. I may be wrong. So always do your own research. Check the website, read the terms before you place any of your funds into all these investment products out there. So actually, Chocolate Finance has been around for about 2-3 years. So back then in 2023, I actually did a similar video on the analysis of Chocolate Finance portfolio. So let's take a look at how the portfolio has evolved. So back then there was only 3 different funds in the portfolio, which is the dimensional STIG, very heavily weighted at 60%, followed by the UOB AM United SG Fund, 35%, and the Fullerton SGD Cash Fund, 5%. But today, if you go into your app, you will notice that the fund itself is very much diversified. It's very different from back in 2023. As you can tell, the largest fund now is only holding 30%, and there's a new fund that has been introduced, which is the LionGlobal Short Duration Bond Fund. 25% goes to the United SGD Fund, which is the same one that was having a 35% weightage in 2023. And we also have 2 other new funds, which is the Amova Short Term Bond Fund, as well as the LionGlobal Liquid Plus Fund, holding 15% each. And the Dimensional Global STIG Fixed Income Fund 10%, and the Fullerton Short Term Interest Rate Fund 5%. So as you can tell, it's very diversified. There are more funds, no longer concentrated in 3 funds. So let's take a look at the risk in terms of LionGlobal Short Duration Bond Fund. After all, it holds the largest, right? So the investment objective is to actually provide return of capital growth and income over the medium to long term through an actively managed portfolio of Singapore and international bonds. And they focus on high quality interest rate securities and other related securities. So they generally invest in bonds with investment grade quality, but also they made a disclaimer in their fact sheet that they may invest or expose the fund to sub-investment grade bonds. So let's take a look at the terms of country allocation. As you can tell, Singapore is 34.8%, whereas in terms of sector allocation, we can see that there's a lot of heavy weightage in financial and real estate, close to 80%. And in terms of security holdings, you can tell that it's pretty diversified, right? The highest weightage is only 2%. And fund characteristics wise, yield to maturity is 3.14%, weighted duration of 2.6 years, and weighted credit rating of BBB+, which is an investment grade. And as you can tell, in terms of currency exposure, 30% of your funds are going into SGD currency, so you won't have matters of hedge issues. And of course, we look at the next one, which is the United SGD Fund, because it holds 25% in your portfolio. So you can tell that is one of Singapore's largest funds with 27 years of track record. So I'm sure you've heard of this United SGD funds before. This fund itself is very largely focused on Asian bonds hedged to Sing dollar. As you can tell from the country allocation, about 30% actually goes to Singapore and China. And in terms of portfolio characteristics sector-wise, financials and real estate once again are the focus, but this time this particular fund is only about 45% allocation in these 2 sectors. And of course, the weighted average maturity is 2.39 years with a yield to maturity of 3.23%. And then we talk about the other 2 funds. First, let's go into the LionGlobal Liquid Plus Fund Chocolate. This is a newly introduced fund into the Chocolate Finance portfolio. And interestingly, when I tried to find more information, I I realized that it's actually a brand new fund, okay? Prospectus only registered with MAS in March 2026, and it seems to be specifically created as part of LionGlobal's investment funds 2 structure, okay? So you can go online and try and search it, but what I understand from my personal research is that it's like a bespoke share class created specifically for chocolate finance users. So there's no particular track record or reference yet, and you may have to do your own research, okay? The prospectus is on the website if you wanna dig deeper. Okay, the other one is the Amova short-term bond fund, where 15% of our fund actually goes in here. Okay, so it's formerly known as the Nico Asset Management. So you may have heard of this fund before, and the aim of this particular fund is to actually seek preservation of capital and liquidity to outperform the SORA, okay, by investing in a diversified portfolio of good quality short-term bonds and money market instruments. Okay, so for Amova itself, in terms of sector and location, okay, you can tell that it's very much focused on finance and real estate once again, right? But this time around is about 46%, thereabout, right? And in terms of country allocation, okay, they're very focused in Australia, 31%, but in terms of Asia-wise, okay, you have Hong Kong, Singapore, China, you have a 30% exposure over there. And fund characteristics-wise, we have a yield to maturity of 3.91% and weighted average duration of 1.88 years, and the average credit rating is actually not bad, A minus, okay? And now, let's take a look at the next one, which is the Dimensional Global STIG Fixed Income Fund. Okay, this particular fund is a little bit different, okay? It is very focused, 100% fixed income asset allocation, and the focus is on globally diversified investment grade bonds. So you can tell from this chart that actually 86.4% actually goes into 1 to 5 years, okay? Quite a chunky amount. And huge chunk goes into BBB grade bonds as well as A bonds, okay? And then AA 20.20%, and interestingly, the super good grade bonds, AAA, only 5.46%. So this actually brings me to something that I want to highlight, okay? It's a good thing that they are focusing less on the super triple A grade bond, right? Because if you want that kind of low risk, high credit quality kind of bonds, then definitely the returns are going to be low, okay? So a lot of it is concentrated in the AA, A and BBB category. And of course, in terms of sector allocation, okay, you can tell that it's a lot of weightage in corporate bonds. And the next one that I'm going to touch on is the Fullerton short-term interest rate fund. Okay, if you look at the characteristics of this fund, okay, in terms of a rating breakdown, a lot of it as well is focused on BBB, okay? Just now we talked about it. BBB is one grade above junk bond, but still deemed as investment grade bond. So high risk, high return, okay? 69.1% goes into there, but not too bad. We still have 26.5% going into the A-graded bonds. And of course, the average coupon is 4%. Average credit rating BBB. And so a lot of people don't know that actually this Fullerton short-term interest rate fund has been around since 2004. It's one of Singapore's oldest short-term duration bond fund, and it invests mainly in Sing dollar and foreign currency fixed income securities for up to maximum 5 years of tenor. So this bond itself is also fully hedged to SGD as well. And you may have noticed that there's a bit of a naming change, okay? It's not a name change, but actually it's a different fund, okay? The last round in 2023, it was called the Fullerton SGD Cash Fund. This time around, it's actually the Fullerton Short-Term Interest Rate Fund. So previously, it was a more conservative fund, purely focusing on capital preservation. But this bond fund itself has slightly higher duration and yield. And as I mentioned, okay, you can tell that the risk rating is slightly different, okay? Minimum credit rating is the investment grade BBB minus, which is lower than some of the other funds in the portfolio. Okay, if you ask me what is yield towards 2.3%, it means the lowest possible yield and cost of hedging foreign currency exposure back to Sing dollar. Okay, you may be asking, okay, now that I know all the monies are going to all these funds, then what are my risks, right? Okay, I'd like to point out, because maybe some of you are not so familiar, okay, there's an inverse relationship between bond prices and interest rates. You will definitely be exposed to interest rate risk, okay? So let's go back to fundamentals, okay? Fixed income bonds, okay? When interest rate rises, the bond price will go down. Okay, so this is what I meant by there's an inverse relationship. Okay, so funds in the chocolate finance portfolio holds bonds, so the value of those bonds will decrease if the interest rate spikes. Okay, and short-term duration of the bonds help, right? Okay, 1.5 years to 2.5 years based on earlier slides. And typically short-term duration funds are less sensitive to interest rate movements than long-term duration bonds. But risk is not kosong, okay? Especially in fast rising interest rates environment. Okay, and your second risk that you take note is actually the credit default risk, because the portfolio holds bonds, right? And some of these are rated like different categories. And earlier I mentioned about BBB, at least BBB. Okay, is investment grade. Okay, so risk of default is relatively low, but as I mentioned, please note that BBB is the lowest rung of the investment grade. Any notching down, okay, one notch below will lead you to high yield or junk bond. Okay, if the economic situation or condition worsens and issuers struggle to kind of like repay debt, then bond prices can fall, and in extreme cases, investors like you and I can actually lose money on those specific bonds. Okay, and the next thing that I want to highlight is the third risk, which is the top up program. Sounds fantastic, but I want you guys to take note that this is not guaranteed. Okay, they mentioned on their website that they will do the top-up program till 31st December or until AUM hits 2 billion. Okay, but just take note, this is not guaranteed. Okay, they don't have a legal obligation to do so. So one of the risks that you can consider or think about is if the underlying bonds underperform, then what happens, right? The differences will have to be top up from their own corporate funds, okay, and when they do so, it's actually a drain on their corporate cash. And I was trying to search whether there are any financial information, but not much. But there was an article that mentioned that they made 5.3 million in revenue, but interestingly, they made net losses of 6.55 million for 16-month period till April 2025, and they are only targeting profitability by next year. So the capacity to top up the difference between the actual fund performance and the stated rate depends on chocolate finance financial health, isn't it? Okay, so the program could potentially be paused or stopped anytime due to market disruption or excessive withdrawals. This brings about the questions on the sustainability of the top-up program. So please be mindful on this point. And the next point I would like to talk about is the withdrawal timing. Okay, if you're gonna need funds urgently, okay, this is not a place for you to place your funds, your emergency funds, okay, because in the past when they first marketed this, they mentioned that instant withdrawals and stuff, but ever since some saga, okay, instant withdrawals has been suspended since March 2025. So this time round they have amended it, and it takes up to 30 hours in most cases, but depending on the situation, it can drag up to 7 business days or so. So this account, Chocolate Finance, is not a place for you to put your primary emergency funds, okay? So only put your spare funds in if you want to invest. Next thing I'd like to highlight is the discretion of them to actually do fund allocation adjustments. As you can tell, in 2023, they actually put the funds in 3 funds, but then now fast forward to 2026, there's like 6 different funds, right? So actually, portfolio manager has the discretion to adjust fund allocation and add or remove funds anytime without approval from you. Okay, so what's the worst scenario that can actually happen? Okay, well, this is a fixed income kind of product, right? So in terms of rising interest rates, okay, I think imagine one day the interest rate rise super fast, okay? When interest rate rise, bond price will come down, okay? And some of the bonds actually go into credit default. And for whatever reason, okay, some people withdraw together, okay, panic withdrawal like in March 2025. And also, concurrently, maybe they decided to suspend their top-up program. So this is like the worst case scenario of everything happening together, right? So what do you lose? I would say that time is one of the factors, because now you're going to have to wait a longer time for withdrawal process, not 30 hours, okay? It's going to take you 7 to 10 business days likely, okay? And if the underlying funds are underperforming significantly, okay, then the bond market will sell off hard. And with the top-up program suspended, your daily returns will drop to the actual fund performance. So meaning to say, if you were to do a withdrawal, okay, you'll be withdrawing the actual net asset value of the underlying funds, okay, excluding the top-up program amount, which may be all in all lower than your stated balance. So in the most extreme scenario, I would say probably when Chocolate Finance runs out of money, it becomes insolvent, okay, it cannot continue operations and a liquidator steps in. Okay, but I think we do not have to worry so much in that scenario, although we don't have the SDIC insurance and this is just a pure investment play. Okay, funds are technically ring-fenced, meaning they are kept separately in a custody account, legally separated from Chocolate Finance balance sheet. So if there is a such extreme scenario, I think you will still be able to receive the actual net asset value of the underlying bond funds at liquidation. Okay, so if the bond funds are doing well, then good for you. Okay, you just get back your money, but you won't be expecting any of the top-up funds to come in. Okay, but if it's underperforming, then you only extract the actual NAV, which may mean a loss on your capital that you put in. Alright, I hope this gives you a better understanding on what your monies are doing, where they are going into if you were to place them into Chocolate Finance, what the risk factors are, as well as the worst case scenarios that could happen. And as always, remember to do your own due diligence. Read the website, ask questions, read their FAQs, read the terms and conditions, read the prospectus, okay? Make sure you're comfortable before placing your money into Chocolate Finance. Once again, you're watching That Financial Goal, and I hope you find this video useful. If you do remember to hit the like, share and subscribe button, and I hope to see you guys in the next.